Howdy all, Siam here. So this is going to be a bit of a lengthy crypto update, but there's a lot to go through, and I promise not to speed through the charts. I've heard a lot of people saying that it's hard to keep up with, the mouse clicking and whatnot. So I'm going to take my time, and part of this is going to go to YouTube, but the meaty stuff, which is actually down here, all of this writing, won't be. So yeah. Anywho, let's start off with the top, which is the gold story. I've had to make notes here just to make sure I don't waffle on and I keep on track. So the gold story. So let's have a look at gold. So I have been a big fan of gold and silver for a long time. I started buying my first silver eagle back in 2008, and I've been a big gold and silver fan ever since. So I started getting into gold so around about here, and what you'll find is that gold acts Bitcoin or cryptos in general act and behave like gold has done in the past quite a bit. So what I'm going to do, because gold moves so slowly compared to Bitcoin or crypto, I'm just going to say Bitcoin. I mean cryptos in general when I say Bitcoin, but it tends to follow the same thing. So we saw a similar-ish pattern to what Bitcoin's going through right now in gold back in 2008. Had a big run off top, and as you can see here with gold, had a very similar contraction before spitting to the downside. And then we've just entered from, I guess, the first big sort of shit the pants low in 2013 to 2019. We're still not out of the woods. And so you have to understand, like, where I come from is basically I'm a past student of gold, so to speak. And just like you're all going through this for the first time with Bitcoin, everything about your investing and trading, for a lot of people out there, are going to be crafted or carved out of your journey and experiences, and I guess pain and euphoria that you experience with Bitcoin. So in about 5, 10, 20 years time, when we see the next Bitcoin, and it'll be, I don't know, quantum bollocks, I don't know, then you will approach the markets with Bitcoin in the back of your head. Just like I've approached the markets with gold in the back of my head over the last 10 years, let's say, etc. Now, let's have a look at, so this is the weekly chart on gold. So with gold, we had an absolutely meteoric rally. Obviously nothing compared to Bitcoin, but it's still meteoric, and this is a pretty big, it's a $7 trillion market, so it's one of the big boys out there. But compared to, say, the bond market, which is 100 trillion, it's tiny. Anyway, we had our first sort of compression. Now, I remember back here where everyone was looking at this sort of baseline here, which was, I don't know, I guess around the 1550 level. Everyone's saying this was support, and everyone was drawing some sort of trend line like this, or maybe even a trend line down, something like that. And so what happened is, whatever you want to call it, a lot of people were seeing this little breakout here, however you want, something like this. They saw this breakout and was, oh, okay, so this is just a pullback. And technically speaking, whenever you see sort of a falling wedge or a falling compression with a flat base in a rising market, this is a continuation signal. So everyone saw this break to the outside as, oh yeah, this is going to continue back to all-time highs. And typically that's what normally happens. You see a breakout in this sort of pattern back to that level here. However, it didn't have enough steam, and then again it rolled over, and we saw a nice dead cat bounce after dead cat bounce after, etc. And it then went to the downside. So that was quite interesting. So yeah, even though that was the base, silver had a pretty similar picture. So, and again, there's another sort of wedge here that so we had somewhat of a flat top with a rising sort of compression here. Now in a falling market, and you see this pattern here, this is the move which should have happened. So you should have seen a move back down to this base level here. It didn't though. So but don't forget, during this phase of gold, there was a lot of manipulation. JP Morgan was suppressing it big time. The London Gold Fix, which is an established committee that is actually out there to suppress gold and silver prices. Just Wikipedia, the London Gold Fix. Basically, the big banks chat every day at noon to say, hey, what price should we fix gold at? So yeah, again, this is where gold just ignored normal technical analysis, and then we had a big old pump and then massive dump. Okay, and then we had the first so this was the first little low here. Now, every trader on the planet that's been trading, for any number of time knows that this low is normally hit. The market will eventually drift down to this low, and that's what happened. It didn't take that long, so it took, if we go from here to here, 9 weeks. 9 weeks to go from here to here. And then when we start having a bit of a waterfall sell-off, and you see the next low posted, you go, okay, so this has also got a high probability of being taken out. And it did. It took a little bit longer. It took 25 weeks, so basically half a year to see this low. It didn't get taken. Yeah, there we go. It got taken out. So it took basically half a year. So what was that? 27 weeks. So this is the point where people think, okay, so this is the bottom, okay, and people start going, oh, double bottom, this could be a double bottom. If it starts going to 1400, we're going to see break to the upside. And guess what happens? You start seeing the move up to 1400. Everyone goes, double bottom, double bottom. They'll be drawing the necklines in here like this and go, right, so we have a 1400, so we have basically a $200 move from here to here. So we should see a $200 move to the upside. So we should see 1600 going. Again, don't forget, every man and his dog has been taught the same old bullshit patterns. But guess what happens? And during this rally here, everyone's going, wow, okay, we are back in the bull market. Because after 11 weeks of bullish movement, guess what? Everyone is thinking, yeah, we're in a bull market. It's been 3 months, basically, and of rising prices, consistent rising prices. And guess what? You have a big old, from that move here, you have at least a 50% pullback. And it didn't quite hit it. So then everyone goes, oh, okay, let's extend this. And we now have potentially a really shitty head and shoulders, or a triple bottom. And guess what? Goes all the way back down here. It really hurts those that really started buying in up here. And a lot of people throw in the towel. And then we have all of these lows are then really taken out. Okay. So this is what I've seen in every market, whether it's commodities. I've seen this in copper and oil, and yeah. So that's that. And then you have more shenanigans, more lows. This is where people really start to hate gold and go, "Oh my God, I'm giving up on this. This is never going to recover." Even more lows taken out, and then you start seeing a gradual sort of recovery. And I guess a lot of people will say, no, ignore that bit. But yeah, we start seeing a nice recovery, and you then start seeing multi-months of rallying. So here's 25 weeks, half a year of rallying, and people think, okay, if we can get above this 1400 level, this may be a good one. And then, so you have every bull on the planet starting to roll in, but it's not to be. This is another seal clubbing exercise. Everyone gets absolutely hammered, and it goes back down to near lows. So this is why I'm always very cautious when people start seeing, euphoria starting to come back into a beaten market. Again, not much happens, and this leads us to where we are now. So gold has basically been in a range. So if we take in, I guess from here to here, it's been in a range for a long time. So what is that? 339 weeks, which divided by 52 is about 6.5 years. And we're still not out. In fact, no, sorry, it's from here to, I guess, there. So yeah, basically 6 years or so. And every single time we see hope coming back into the gold market, it's absolutely stamped on its face. So this is why I've still got lots of physical gold, and for security reasons it's not stored in my house, but yeah, personally I'm not interested in gold until we get above these sort of $1,400 highs and we stay above it. And unfortunately that's not going to happen until we see the stock market crash and have a few months of capitulation in the stock markets at least, or after the lows of the stock market crashes. But hey ho, so that is gold. Now, if you just chisel this picture into the back of your mind, especially with all of the psychology that's going around at the moment, this is why I've been bearish on Bitcoin for a fair while, because that and that are very similar patterns, or pictures, so to speak. And so when we saw, so this is why for a long time, people say, people still. In fact, I was at a wedding the other day, and someone, the other day, it was 2 days ago, and someone basically smirked in my face, said, "Oh, you called 6,000 as the low." Well, yeah. Don't forget, I called 6,000 as the low after it bounced off this $6,000 level and went back to 11,000 when everyone was going, "Oh yeah, we're going to go back up to highs." And I was like, no, we're going to see these lows being taken out. So this is why context is everything. So people still think, yeah. Anyway, so context is everything, and everyone, So this is going back to early 18, and I said 6,000 was the low for a long, long time. And guess what? For the best part of half a year, or a year, it took me about a year until we did see that low taken out. But obviously once that low is hit or taken out, you then have other lows to look at. So this is why when we had this sell-off around down to the sort of 3,200, I said that, okay, with my experience, seeing what I've seen with gold, there's a high probability that this 3,200 level is going to be taken out. Or whether it's 3,500, 3,200-ish. So yes, I have made a few bad calls in the last year or so, because my mantra, my trading methodology for a long time has not been to top pick or bottom pick, and I guess I should have just put my whole load in around this level here. However, I was very confident. That we would see this low being taken out, and I was aiming to get in and leave Bitcoin or cryptos forever, or for a long time, with a little surge down here. And unfortunately, in my case, that did not happen. And I was even more, one of the reasons why I was so convinced we would see another fall is because of this here. So if we draw another line like so, in fact, obviously we can see what happened here, but I saw this pattern forming out. If you look at previous videos, I saw this going, and I thought, wow, rising compression within a falling market is extremely bearish, So if, for example, oh my lord, go away please. We should have seen a move coming down here. Again, let's put that in, and that is from a technical analysis point of view, that should have happened. Obviously, shoulda, woulda, coulda. But don't forget, we had spent a long time. Oh, a bit stamp. Sorry. Let's use the Coinbase one. So look at Ether. Don't forget, during all of this time, we were making lovely progress with Ether. Basically selling Ether before it dropped, and then buying back in once it consolidates, and then selling, etc. So that's how during last year we accumulated a lot more Ether than we should have. So here, whenever you have a strong bearish market and you see a compressionary pattern like so, you then see a waterfall sell-off like this. Here's another one that we saw bigger rising compression in a bearish market. Boom, waterfall. So what tends to happen if you take we zoom into this one to begin with. You see, when you see this compression, there's like a 90% probability that the market will shoot to the downside, because this is a continuation pattern, and hit the base of where this compression started. So there's like a 85-90% probability we're going to hit this target over here, and then it has something like a 50 to 60% probability that will continue going on another 50% from this level here. And that's what we're doing for a good old solid year with Ether. We're basically hit, as you can see here, we did it several times. Then we saw this one here. Sorry, if we actually just get a little, there's actually this one. I got so much shit during this little rally here, but then we saw the fall. It didn't hit quite this low, but not initially, but it did eventually. But what it formed was, I guess, a bigger compression. Maybe you should have sort of angled this one. This is more of an angled one. However, even though that's somewhat of a symmetrical compression, because of the downside momentum, there's more probability of splitting to the downside, and it happened. And then we saw this one, and this was the last one, which did not play out. So again, obviously there's two lines there. You could have drawn that line there, or some way. Let's just go back to this line then, or something like this. Yeah. So either way, whichever compression you're looking at, I was looking at sort of this line here. I mean, whether you draw that line as a flat base or a bit of a rising wedge, it doesn't really matter. What I was looking for was simply another move to the downside, because we saw these two bites of the cherry up here, and I was waiting for something like this to at least tack this $80 level, just like it had happened so many times before, and I guess 14 years of trading where that happens. So yeah, I was caught out there. Obviously it spat to the upside, and we pulled out quite some time ago. So Ether has hurt us, or hurt me, in that particular one. However, it's not the end. It's not end of days. It really isn't. So that's where I guess my molding has come from. So let's go back to Bitcoin, and yeah, as we can see here, everything spat to the upside. And again, we saw another. If we zoom in again, we saw another little. I'm gonna have to be a bit more accurate with this drawing. Somewhat like this. Again, from a technical analysis point of view, we should have seen a pullback down to around sort of these levels here, but we didn't. We saw a spike to the upside. So this is why, as I've said for a while, every proper pattern you can show me on technical analysis on Bitcoin, I can show you many examples where it isn't fulfilled. So again, we had this sort of double bottom here, and everyone's calling a double bottom, and I was like, nah, this is not going to be a double bottom. It didn't play out, and then people went, oh yeah, it's a really shitty triple bottom, or really shitty. It's not even Head and Shoulders. Either way, it doesn't matter. It popped to the upside. So this is very much like what I saw with gold. What I've seen with gold and silver. So going down here, we saw this double bottom. Very much like this. So look at the compression, waterfall, potential double bottom. Oopsie, wrong chart. Again, compression, waterfall, double bottom. And yeah, I was expecting more drifting to the downside, and unfortunately it just was not the case. We did not see the drifting. So with that in mind, I'd like to bring your attention to where are my videos? My channel. This one here. I'm saving it like all the freaking time. So in this one, where I basically said most projections are rubbish, with Bitcoin you can look at a whole bunch of different scenarios of what could happen with Bitcoin. So here I was basically saying you had Bitcoin's had three main proper bear markets and at the end of each bear market we have two mini sell-offs, etc. It's worth watching it if you haven't seen it. And then I saw another one, and then I made another sort of projection using basically the Bitcoin halvings, which is the only real set in stone thing with Bitcoin, as in every 4 years we have a halving. The next one's the 20th of May 2020. Now, if you're looking at this, what you tend to see is sort of first bear market, second mid bear market, and then recovery. And then you have a bit of a rally up to the halving, and then it goes to the races. That's basically what we're seeing over here.
But yeah.
And one of the little compressions which I've been eyeing up is around 2016, 2017. So again, look at this compression and spit out, and then a bit of a recovery. And let's compare this to others now. Again, I'm not a fan of doing sort of hindsight comparison, but thing is, Bitcoin is in a world of itself, and I think it's like a self-licking lolly, because there are so many people out there. Things and all believing the same thing, it tends to happen. So I think what we're seeing is maybe, I guess, masses making potential patterns play out themselves. I thought there would be a lot more whale intervention, as in whales suckering people up to get their fill. But what we've had is really 6 months of, or in hindsight now, we're seeing that all the accumulation has most likely been done around here and over here. I still think there's more accumulation to come, because I know there is a billionaire out there who for the last year has been trying to buy up $100 million worth of Bitcoin a month. Basically had a 1.2 billion allocation to get into, and I know he's not in yet. So yeah, we still have billionaires out there who are missed out. Like this guy was looking to buy basically $100 million worth every month. And when Bitcoin was around sort of $3,500-$4,000 level, and he was looking for a 7% discount. 7% discount, and I said it's not going to happen, mate. And yeah, he then left, and he's looking for other facilitators, and I said you're not going to find it, and you're going to end up missing out. And guess what? He did. So he's still in the market. Whether he'll come back in soon or not, who knows. So that's the first part. I've been trained via gold. So 22 minutes in, we're on point 1. But hopefully this will make sense. So the next point that I'd like to make is previous Bitcoin compressions now surging up. So we have had so when you look back in time, you'll see there's a lot of very similar patterns. So this one here in 2017 is pretty similar. We had the compression, sell-off, followed by a sharp V reversal here. It wasn't really much of a recovery, it's just a V reversal. Then here's the thing which is quite interesting, is that it goes into a flat top. Oh, I can't draw for Shoffy. Oh dear Lord. I'm going to get my pen actually. I'm a bit more accurate with my pen. Oh, God's sake. Let's go back. Okay, here's my pen. So we have, and it went basically straight into a pattern like this, and then pinged to the upside, which is pretty much what's happened. If we zoom in over here, we've had that sort of, I guess, in the big grand scheme of things, if you're to look at this in the weekly chart, because everything is quite fractal in nature, things are getting bigger. I guess when you're looking at this on the weekly chart, we're having that compression and somewhat of it, or it's more of it's not really, you couldn't really call that a V reversal. But then everything in perspective, if you look at the monthly chart, that does look very similar. However, going back to, let's go back to where we were over here, zoom in. what we then saw from this little compression, it spiked up. And normally when you see a spike like that, if you look at pretty much any FX chart, when you see a surge like this, you normally nearly always see a pullback to what's now support, followed then by so you see this and then that. But however, that didn't happen. And what I've seen with Bitcoin is that doesn't happen a lot these days. Especially when you're in a recovery phase or a bull market phase, you don't see that pullback. It just pauses for a couple of days and then charges home, charges onwards. So that's why, I'm quite cautious about, So here, and there have been other examples. Let's have a look. Where have they gone? So yeah, here's another one, very similar pattern. This is more similar to what we're going through now. We had more of a recovery, U-shaped recovery. Again, we had a nice pullback opportunity over here. So I guess it did, in this case, pull back. But when it started getting going, and we started having, I guess if you're looking around any of the real explosions, so like from here to here, we didn't really get a pullback to where the expansion took off. Again, this is where technical analysis again defies, or Bitcoin defies technical analysis. This is a rising compression in a rising in a rising market. So this has a high probability of pulling back to this level here in that pattern there. But guess what Bitcoin does? Bitcoin goes, I see you, technical analysis, and I am going to completely ignore you. And it serves as the launch pad for a new all-time high. So you got to be really careful. This is why looking at technical analysis on Bitcoin, you got to take it with a big truckload of salt. It's pretty much 50-50. It really is. And the lower the time frame you go, it's even more woollier. Woollier. If that's even the right phrase. I'm rubbish with phrases. So, and again, we've seen this in previous charts. So let's get back to where we are today. Let's zoom out a bit more. Okay, so this is where we are now. We have had a bit of a compression, bit of an explosion, and this could lead to another one. So it could. So that's the next one. Point 3. So this is interesting. I've been analysing my personal situation pretty much every day for the last couple of months now, and there has been one thing bugging me in the back of my head, I guess. Well, my heart wanted to go in around here. So when we were around when we were dicking around $4,000, my heart was like, Siam, you got other things on your plate at the moment. Just go all in, as in back into ontology, because that was what I've been planning to go in for a while, and then get on with your life, and don't try and bottom pick over here. But my head, the trader in me was going, nope, shut up, heart or devil. I'm waiting for this rollover back down to sort of these levels again. So what my heart is saying now, or the devil on my shoulder, or whatever, is saying, okay, you now have to concede that if it does go back down here, if something catastrophic happens, I don't know, Tether blows up, whatever, we may see a big sharp pullback, but it's unlikely we're going to see it pull back down to the $2,000, $2,500 levels, which is what I saw earlier or in the past have been looking for. It's going to take something absolutely colossal to bring it down here, and I can't think what that may be. But if we do have something, I think it is highly unlikely we're going to see falling down here. I'd love to see it fall down here, because I would then fill my boots. But I can't see that. If we did have some big, real big market scare, it could come back down to these levels here, but then again, technical analysis, perfect on FX, and we've been calling some really good trades. But hey, so going back to point 3 here, I think despite my head going, we are still expecting some pullback, at least back down to the 6,000 level. Again, from a technical standpoint, this is a huge support level now. We should see a pullback to this level here. But again, common thinking doesn't really stay with Bitcoin much these days. And so as an insurance policy, my heart, I guess, is saying we need to get back in just in case. Just in case we're going to see an abnormal move, just like we saw here, or here, or many other occasions where it's bucked the normal trend. So this then leads us to the next point, number 4. So now I am planning on getting in, as an insurance policy, just in case. What's the plan? Well, first, what is the situation? So the situation here is, I guess this is not my D-Day, this is my watermark, this is my original level. So if you go back to 23rd of August 2018, this takes us back to this video here. So if we go back to my community, and this was the first real big trade where I was shuffling things around. And in this, so it says 9 months ago, but it was 23rd of August.
Great potential, and that you see.
This was basically where I was selling all of my Neo to then flip-flop into gas and ether, etc. And where, so this is at that point there, I'd taken off a whole bunch of profits previously, and so what I was left with was what I deemed risk capital for me, and I wasn't too fussed, but this plan was to grow this little risk pot into a lot more. So at that point in time, I had 3,500 Neo, which was at that day, that Neo was worth about 9.29, 9.3 Bitcoin. So long story short, moving forwards, as long as I am above that level, I'm happy. Okay. Yes, you can kick yourself in the bollocks and go, right, let's cry over all of the profits that I've lost from here to here, and I've lost 120 odd %. So yeah, I could cry, but it is pointless in trading. You should not go, oh my god, I've missed out on all of that. I mean, as I've said in the past, you could just look on any old trade, any old chart, I don't know, pound Swissy for example, and go, oh my god, you've missed out on all of this movement from up here to down here, or from down here to up here. Oh yeah, we've actually got some nice trades on here at the moment. Let's pick another one on a blank chart. Here we go. Yeah, so you could have kicked yourself for not shorting, euro dollar from up here to all the way down here, and we would have made about 1,200 odd pips. It's like going into a bar and there's loads of hot girls. Let's say there's 100 hot girls, and then every single time a hot girl leaves the bar, you're then kicking your own face and going, oh, you're an idiot, that girl could have been your future wife. And then every single time a girl leaves, you start kicking yourself in the face, because all these potential wives are leaving the door. You shouldn't do that. So yeah, this was a lady. So this move from I guess here to up here was a hot girl leaving the bar. That's basically it. Move on. There's many other opportunities, and again, when you look at the big picture, and I think one thing that many people can sort of relate or agree, at least one thing we can agree on, if you are a fellow Kryptonian, a crypto follower, is that I'm expecting, in fact, looking at the exponential, you need to look at a logarithmic chart really. I am expecting, Bitcoin follows an exponential chart, or exponential characteristics. So on a logarithmic chart, what this means is it's a straight diagonal from zero. Oh, it should be from zero actually. Wherever zero is down here. So that is what an exponential chart looks like. But Bitcoin is obviously it's gone beyond that, or it's performed better than exponential, should I say. But even if you were to put the mean, I mean, this is basically what we're looking at, providing nothing crazy goes wrong. So we're looking at, well, obviously Bitcoin's been above this line for quite some time, but we are looking at, you know, $100,000 easy for Bitcoin. I'm personally looking about 250,000, but yeah, that's the big picture. Let's look at, just go back to where we are now. That was a dodgy line. So that is my watermark. So if we look at this point here, if I were to pile in right now, you can look at things differently. So if I were to pile into Bitcoin right now with that original fund, so in fact that watermark, the pot which we've been playing around with is that $72,200. Okay, so if I was to pile in $72,000 into Bitcoin right now, I'd end up with 8.28 Bitcoin. So that means I've pretty much lost a whole Bitcoin if I was looking at it that way. Or if I was to pile all the $72,000 into Neo, which is what I really, in the long run, it's Neo and Ontology I quite like, for the moment anyway, I'd end up with 5,898 Neo. So I would have gained almost 2,400 Neo. So that's a massive achievement. Well, it's not, achievement's definitely the wrong word. So obviously it all depends which way you look at it. Ideally, I'd like to be up on both sides, and this is with cryptos. It's all about the seesaws. You can never say, oh, the pound is strong today. Well, against what? Is it strong against the dollar? Strong against rupees? Strong against property prices? At any point in time, a currency on its own will be strong against something and poor against something else. So yeah. So here are the typical options you can do from this point moving forwards. So the first one is you could plow into Bitcoin and be done with it, okay, and move on with your life. Yeah, you could. You could pound cost average in. Yeah, you could. Historically, pound cost averaging in is a good idea. I am a fan of pound cost averaging in with most things. With Bitcoin, yes, still, it is a good thing to do. I mean, in the past, I've given loads of examples that, let's say you were to pound cost average in, like every month, or slowly over time, even on a big bull market. Okay, so let's take this 2017 bull market, and I've said that even if it's a pound cost average in at the worst time, so here, I guess here, at all the highs, you would still have done really well. Your average price will be much lower than, always lower than, the last time you got in. And in a bull market, yeah, you can pound cost average in and still be fine. However, it's pound cost averaging in is a bit of a blunt tool for people that don't really know what they're doing. It's a bit like just dumping your money into a mutual fund or a tracker fund that mimics the stock market. Yeah, that's good for people that don't know what they're doing, but for people that do know what they're doing, it is a bit of a blunt, dumb tool. And the thing is, if you do with Bitcoin in particular, when it is, I guess, in a recovery phase or a bullish market, I still don't admit that we're in a bull market yet for Bitcoin. I guess we're in a bit of a pullback phase, or recovery. Personally, I'm not convinced we're in a bull market until we stay above, at least stay around these highs for a little bit longer. But the thing is, if you aim to say, let's buy in on the pullbacks, let's say, so market starts going up, you aim to buy on a pullback, okay, so you manage to get in down here, okay, cool, right, where's the next pullback? Okay, you can get in here. Where else? And the thing is, let's say you keep on doing it all the way up here, and you manage to really time it like an absolute Jedi. And this one here, look at where, and let's say that's your full 10 grand or 100 grand or whatever your pot is. Yes, your average buying price will be in, I don't know, somewhere around here, somewhere around here, let's say. But the thing is, if you were to just put most of your load in when you decided to go in around here, you would have been a lot happier than, you know, if you got most of your load in around here. So this is why Bitcoin, pound cost averaging is it is fine, and I've got nothing wrong to say with it, because in most cases it's an alright tool. But I think in a situation like this, I could just say, right, I'm going to phase in 72 odd grand over the next 6 months. But the thing is, in 6 months time, where is the price going to be? Could it be up here? And even though I'll be, So I guess going back to this insurance bit, pound cost averaging isn't that appealing, which leads me to the third thing, which is what I normally do, which has always looked after me in the past, is the Siam seesaw or flip-flop. And the easiest way to look at that is this. So what I tend to do is, because all currency pairs are done in exactly that, a pair, what happens is you have certain pairs which are strong and not strong, obviously, and you can then flip-flop your way upwards. So what I tend to do is look for, I guess, low-hanging fruit, like so, and then I'll get on over here, and then I'll wait until this goes down, then obviously this will go up, and then I can move my little man. I can then go wee over into the next one, and then again, when this starts going down, this will obviously go up, and then my little man can just basically jump from one to the next to wherever I want to be. So now it's too early. Obviously you can't tell what it is. I mean, what is this first entry one? Is it Gas Neo, or is it or is it even Ontology Bitcoin? And I've been doing a fair bit, and over here you have no idea what they're going to be, because things always change. But what you can sort of look at are the first couple of two seesaws. And so this is what I've basically been looking at. Going back to the Word doc. And yeah, this is what I'm going to do. But before we go into that, I'm going to have to end this video for YouTube. I just want to recap why I'm in cryptos, and I think everyone should always recap why you're in cryptos yourself. So first of all, it's a great net worth leapfrogging opportunity. So it really is. I'm a big fan that wealth is not linear if you do it right. So if you just do what, you know, the whole world of common finance says, you know, put your money in a tracker and then after about 100 years you'll be a millionaire. I'm not a fan of that, so to speak, because you can do things a lot better. So if we just draw a little line over here, and let's say this is your life wealth, I guess. If you do things properly, it should be exponential, like this. Obviously it shouldn't go backwards in time, like this. But what you can do every now and again, well, one thing is that you should always monitor the amount of time it takes you to double your net worth, okay? And if you can keep that cadence flat, as in, let's say you double your worth every 5 years, great. I could have just put the EA there. Or is it 2 years, or is it 10 years? It's fine. But every now and again, the markets, at least once every 5 years, will give you an opportunity where you can leapfrog your personal net worth by 2, 3, or even 5 leapfrogs. And personally, I think cryptos is it. In the long run, hell yeah, I think it is. In the short term, obviously we've had a lot of shenanigans, but I've always said cryptos are the future of e-commerce, money, everything. Finance, full stop. So yeah, that is it. If you're in it for the long run, great. I like it for the tech, not really for price chasing, because I feel like if you're chasing the price, you're like a dog that chases cars. But also for me, it's cash flow. With cryptos comes very many opportunities to derive cash flow, whether you're holding Neo and it's spitting out gas, or Ontology, it's spitting out ONG. whatever it may be. And what do you use this cash flow for? Yes, you can use it to buy more cryptos, but personally I like to divest out of cryptos into real tangible assets, i.e. businesses. So I like using that cash flow to grow existing businesses or buy other businesses. So yeah, that's a 45-minute little update here. So yeah, I am going to go back into the markets, and I guess I'm going to have to pause it for here for now, for YouTube, and I'm going to make another video, and this is for my students, and we're going to go through what's down here. So I hope this has helped for those of you out there, and I'll see you soon.